everyone, I'm Karunya Rao and in the spotlight today is Minda Corporation. The company posted a stellar set of numbers for the final quarter of FY21. Rising content per vehicle, higher demand from aftermarket and exports has helped the company post a robust top-line growth of 48% YOY. Despite significant rise in raw material costs, EBITDA margin came in at 11.1% in March quarter. Operating margin expanded due to operating leverage and prudent cost management strategies. A sharp recovery in demand post-COVID related lockdowns for PVs and two-wheelers, increase in content per vehicle due to BS6 and growth driven by new focus areas makes us upbeat about the prospects of the company. Moreover, the company's strong order book and robust product portfolio add to our confidence. Though the near-term outlook is impacted due to the severe second wave of COVID-19, management has highlighted that demand is expected to come back sharply post-lifting of lockdowns in the various parts of the country. Minda Corp generated around 63% of its revenue from two-wheeler and passenger vehicles during FY21, and these are the segments that are expected to witness significant pickup in terms of demand like last year post-lockdown. Management is quite upbeat about these segments. It has indicated that preference for personal transport will continue to be a key growth driver. The commercial vehicles CV segment also has started catching up quite sharply. In fact, the budget promised a huge increase in investment to revive economic growth, which is going to be a positive development for construction space, for capital goods sector, and it will also boost demand for CV space as well. Additionally, government scrappage policy is going to be a key driver for pickup in CV volumes. Minda Corp is one of the key beneficiaries of BS6 emission norms rolled out in April last year. And because these norms require increased wiring harness content, it should lead to increase in revenues for the company. In fact, the positive impact is already visible in the numbers of the last 2 quarters. Meanwhile, the replacement segment also continues to increase its share in the revenue pie. It has grown to 15.7% in FY21 compared to 13.6% in FY20. Also, the aftermarket segment has grown 23% YOY. We believe that demand in this segment will also be robust on the back of the company's strong distribution network and wide product portfolio. What makes Minda Corp different from other auto component manufacturers is the constant innovation. The company has been working on various new areas which are expected to provide significant growth in the years to come. It is currently focusing on keyless entry solutions where it is in contact with multiple OEMs. These solutions are also expected to have 3 to 4x content per vehicle compared to traditional method. For emission systems, it is working on wiring harnesses, compressor housing and even powertrain sensors. It's also focusing quite aggressively on the electric vehicle space as well. It is developing products related to battery chargers, BMS modules, motor controllers, sensors, telematics, etc. In fact, the company has already won several orders in this space. What's encouraging is that Minda Corp continues to get new orders, which translates into good earnings visibility. In Q4 FY21, it received orders with an overall lifetime value worth more than 1,055 crores. Out of this, 700 crore worth orders came from new business, 350 crores from replacement business. Now looking at the share price. It's currently trading at an attractive valuation of 15.3 times of FY23 projected earnings. And given the host of growth levers in place, we advise investors to buy the stock with a long-term perspective. However, there are risks to watch out for as well. Any slowdown in demand could hurt the financials. Any adverse movement in commodity prices would increase raw material costs and could therefore hurt operating profitability.